I started shorting Nvidia 2 months ago and recorded a video back then. I wanted to record a video at the end of each month to share with you how that short position has been faring. Overall, it's certainly been an exciting ride where Nvidia stock has shot up, and more recently, the stock has really come down. Overall, the stock market's really sold off this past week, and it's really helped a short seller on Nvidia as well as other stocks that I'm shorting. In general, I'm not a big short seller, FYI. I've made most of my money by investing and holding great investments, great companies for a long time. But I just recognized that I was seeing that the market was just pricing the Nvidia stock too high, much too high. And as I've said before, I think Nvidia is great. I think their GPU technology is exceptional, and they really are the semiconductor company of the time. But the company is not the stock price, and the stock price is not the company. They're two different things. I love the company. I just think the stock price is much too high. I don't know that I would get a lot of rational arguments around that topic of the stock price. I think it's incredible how high it's gotten. And I've tried to put fundamentals to work, a valuation model that I've been using for a long time to work, and make my best judgment and then put my money on the line to see if I'm right. Is this stock price going to go down and continue to reward me in my short position? Or will it rise so fast that the market will teach me a lesson and I will pay the price for that lesson? We'll see. Before I advance, just a reminder, I'm an individual investor. I'm not recommending you short Nvidia. I'm not recommending you buy Nvidia, sell Nvidia. I make no recommendations. Please make your decisions on your investments independent of this video. Now let's take a look at Nvidia fundamentals and take you through my logic that I used to establish this short position. When I look at the Nvidia stock chart and I see a parabolic chart, it's pretty incredible. And the outcome of other parabolic stocks, which I really referenced in the first video I created 2 months ago, I encourage you to watch that video, is the examples of Intel and Cisco. They had similar charts, and the outcome was pretty bad for stockholders. For the following 10 years, they lost a lot of money and they never got close to the stock price or the stock high that those two companies achieved. And I believe that history doesn't perfectly repeat itself, but it certainly rhymes. When you see examples like these, it's a first step in seeing, is this stock just way overheated? A lot of people just jumping into a company that's been going up and really believing that this stock's just going to go to the moon. And frankly, it almost reached the moon, but now it's coming back down to earth. You could see that in recent weeks, the stock has really come down. In fact, from the high, Nvidia is down 25%. So it's in bear territory officially. But of course, the stock's still really popular and may continue to get a lot of buyers. But we'll see if the smart money moves out of the stock. That's a big question. There's a lot of questions, and it's certainly the most exciting stock to watch on the stock market. I value companies using their free cash flows and forecasting those free cash flows and then discounting those cash flows to today's value. I also look at earnings per share, and I've run those valuations for Nvidia using a very optimistic forecast on cash flows. I just believe that their current cash flows are incredible. I took Q1 of their more recent earnings and multiplied it times four. Their Q1 was quite incredible, and that would put them at $45 billion of free cash flow. That's substantially higher than anything they'd ever done before. And I believe it's the highest in the industry by a broad margin. I'm going to grow those free cash flows by 25% in years 2, 3, and 4. Again, another very optimistic forecast of cash flows just really expanding to the point of reaching $88 billion. Now, the semiconductor industry is cyclical. It goes up and it comes down. And in this case here, I'm not going to put any cyclical forces on my forecast. Instead, I'm just going to say they're going to keep that run rate of free cash flows at 88.6 billion. They're actually going to grow by 4% in the terminal value into the future. So this is a very optimistic forecast. Even when I go with an optimistic forecast like that, and I use a discount rate of 8%, I reach an intrinsic value of those cash flows of $1.78 trillion. I add cash and take away debt to reach what I feel is an equity value of the company, and that's $1.8 trillion. The market cap is 2.64 trillion. So I think the stock price is overpriced by 32% if I compare it to a very optimistic forecast on Nvidia. If I look at earnings per share, it's expected they're going to do about $2.76 per share in 2024. I'm going to use a PE of 36. I think they most definitely deserve a 36. The reason I used a 36 is, again, this is a cyclical industry. They don't keep producing data center products forever and continue to expand. At some point, data centers will have everything they need and they won't need to buy anymore, or at least for a year or two. And when that happens, you see the cyclical forces of the industry bring down the revenues, bring down the profits, and make semiconductor companies have a few bad years or maybe a few bad quarters. So that's why I use 36 versus very optimistic numbers up above 50. Now, I'm going to use a 36, and then I'm going to grow those earnings per share by 5%, and I get to a per share value using earnings per share of $104 per share. And the stock price currently is $107. So I think it's fairly priced if we use earnings per share. When I blend the two, I get to a 22% premium that is being paid on Nvidia stock if I look at the most optimistic forecast that I can put together. This is the basis of my decision, as well as looking at how fast the stock price has risen. I get that some stocks become or get discovered, or the market realizes how valuable a company is. I get that, but in the case of the stock price, in this case, it has just risen just incredibly fast. I think there is a lot of hype put into that price, and that's one of the reasons why I began to short the stock. I began to short Nvidia on around May 29th. And the price that I started to buy into the shares was actually about $118. And I'm not smart enough to know exactly when a stock's going to peak or when the lowest point in that stock price is. But I am more of a dollar cost averaging investor. So what I did is I shorted some shares on the 29th of May, and I came back and shorted another set of shares later on. And overall, I shorted the stock on 5 occasions. And more recently, there was a really uh, aggressive rise in the stock of 12% on July 31st. And I shorted more shares on that day. On average, I have about a 10% gain overall if I compare the average price that I've shorted the shares compared to the current stock price. So far, so good. It's certainly been a very volatile ride. You could see that, from the time I decided, I'm going to short Nvidia, the stock really rallied, which got interesting. And it's really had a lot of volatility, with it having some pretty tall peaks, but some pretty steep and low valleys. And more recently, it had a really strong pullback. It had a rise of 12% and then another drop of 7-8%. Yesterday, it fared fairly well. It only went down, I think, less than 2%. The rest of the market really sold off. So that was interesting. Overall, I've put a 30% up or down guardrail. If the stock were to really advance and reach 30% above my average acquisition cost or my short price, then I'm going to sell and take a loss. And it'll be a lesson that this stock is just really incredible, and was unwise to short a stock that is this popular and has this type of momentum. And if I'm fortunate to make 30% on this position, I'll close it out. In addition to those safeguards, I'm also looking at earnings releases. The stock tends to rally quite well during earnings releases. And the last earnings was on May 22nd. And you could see that from May 22nd, it really rallied. It rallied up 42%. That's incredible. The previous earnings, which was for Q4, was in February. I believe it was around February 22nd. It didn't have such a rise. It had, a pretty good run, 18%. That's a pretty good run. But I guess by Nvidia standards, that's an okay run. And I think that's what investors are really in love with is, boy, they put money into the stock and it has just gone to the moon and made lots of money. And why not put more money into it since it just keeps making money? But stocks just do not go up forever. At some point, they have to be tethered to fundamentals. And those fundamentals are what I'm using just to set the basis of why I think I should short the stock. So far, so good, but it is a risky course. Part of why I'm doing this is to really exercise my logic. I'm seeing what I think is an obvious trend or an obvious imbalance between stock price and stock value. And I'm exercising really that decision and I guess testing if I'm accurate or inaccurate. I think I'm going to learn something out of this. I'm either going to pay a price to learn it by losing money, or I'm going to learn something and make money. But overall, part of my return on investment is the opportunity to learn something. There's a big difference between saying at a point in time, hey, I think this is what's going to happen, or I believe this company is priced too low or priced too high. It's another to put capital down and put money at risk and really play for keeps. At least it makes me that much more involved when I put my capital into a position and see it rise or drop in value. And that's certainly the case with Nvidia. I again want to say that Nvidia is an awesome company. I think their GPU technology is incredible. And I am not saying one bad thing about the company. I think the company is terrific. And anybody that is an employee of Nvidia, congratulations and great job on building a great company. But I'll continue to have this short position. I'm going to weigh carefully the next earnings call and see if I want to sell, if I'm sitting on a pretty good gain, or frankly, if the stock really rallies going into that earnings. I may get out of the position. I'm not sure. I'll see how I feel closer to August 28th, which is when Nvidia has their next earnings. So far, so good. I've shorted probably about 6, 7 stocks that I believe were really hyped up around this data center. And it's really gone well. One that's probably not data center specific is CrowdStrike. I started shorting CrowdStrike, and I would say I got lucky on that one. CrowdStrike created the biggest outage in computer history, and the stock really just crumbled from that point. And I walked away with a 29% gain in 10 days. So that was a pretty good gain. I'm certainly glad that I felt that CrowdStrike was just a little too overhyped, a little too much enthusiasm in that stock. We'll see if I make out in the positive with Nvidia or I end up losing money. Anyway, that's an update on my Nvidia short. So with that, everybody, good luck investing, and I appreciate you watching.